The latest business news now, and well, a gloomy outlook for the global economy in 2020. That's the joyous news. Our business editor Stephen Carroll is here to bring us the details of. Stephen.
If I only bring you good news. This is the latest economic forecast from the World Bank, which sees only a slight improvement in the global growth rate in the coming year. That's after 2019 was the weakest year since the financial crisis. 2020, the bank says, will be better for emerging economies than for developed ones. It's expecting growth for the United States and the Eurozone to be slower than last year. The Eurozone slowing down to 1.1%. But the picture is brighter for countries like India, where growth is expected to rise to 5.8%. I've been speaking to one of the lead authors of this report, Francisca Onsorga from the World Bank.
So 2019 was an exceptional year. Global growth reached a post-crisis low of 2.4%. Emerging market and developing economy growth reached a post-crisis low of 3.5%. In the last couple of months, we have seen signs of stabilization. Business surveys have improved a bit. Some of the export numbers that have recently come out are a bit better. There is some signs that the trade tensions are easing. So we do expect a stabilization in 2020, but that is a pickup, an inching up of global growth from 2.4% in 2019 to 2.5% in 2020. And even that is a very fragile recovery. It essentially rests on a rebound in emerging market growth to 4.1%. And that in turn is itself driven by really strong rebounds in 8 emerging markets and developing economies that are coming out of a very difficult 2019. So there are big downside risks to this global growth outlook.
You can see that full interview on People in Profit on air at 12:45 Paris time today. Well, it's been a roller coaster week on the markets with the escalation of tensions between the US and Iran. The price of oil, the Brent crude oil, had spiked to a 3-month high of over $70 a barrel on Monday, but it slumped then on Wednesday after it appeared the US was pulling back from further escalation. Now down around $65 a barrel, up slightly on the day. WTI having similar sort of movement. Now that's levels that we saw last on oil prices in mid-December. So it seems the markets really have recovered from the volatility of the past week. Plenty of volatility on the stock markets as well, we saw, but shares breathing a sigh of relief today. The European markets opening the day up. We're keeping an eye on shares in International Airlines Group that owns British Airways and Aer Lingus. They're up 1% after it was announced that CEO Willie Walsh was stepping down. He's going to retire in June. He had been responsible for a huge transformation of that company. In Asian trading earlier, we had gains across Asian markets. The Nikkei in Tokyo finishing up 2%, but strong gains too in Hong Kong and in Seoul. As we were hearing earlier in the bulletin, it's day 36 of transport strikes in France, and a major demonstration is organised by unions for today. French retailers, though, and particularly in Paris, have seen a massive drop in their business during the strikes. Wednesday was the start of the traditional winter sales in France, but will that help struggling shops? Shirley Sipman has more.
With few metros running across Paris, getting to shopping centres is a struggle. Potential buyers have other priorities than winter sales.
I have other things on my mind with the strikes and all that.
Price deductions have drawn some shoppers back to stores.
It's important for me. I took a day off.
Still, day one of these winter sales had little in common with the usual frenzy.
We get a customer every half hour, but it's better than other mornings when we've had no clients at all. It's really tough.
Sales were down 30 to 50% in Paris shops in December, a crucial period. Winter sales are another key moment for retailers. Paris high-end department stores welcomed customers, many of them tourists, but even they believe figures will decline.
We usually make 12% of our annual turnover during winter sales. This year, with the strikes and the disrupted transportation, we may not hit that target.
2019 was already a tough year due to the Yellow Vest movement, which scared clients away. According to the Small Business Federation, almost 2/3 of small store owners say they risk shutting down in coming months. The government has decided to allow small business owners to delay paying their taxes. The economy minister is now examining potential tax deductions for businesses that risk shutting down.
Finally, from me, a new rival to Netflix is hoping to win viewers with TV shows that are just 10 minutes long. Quibi is targeting younger smartphone users with bite-sized videos. Major Hollywood studios have already pledged $1 billion in funding for it, and stars including Steven Spielberg and Jennifer Lopez have signed up for its shows. Quibi will be joining a crowded field, though, after Disney and Apple launched their streaming services in 2019. Perhaps not surprising, streaming is expected to be worth nearly €620 billion in the next 5 years. Even more things to watch, Eve.
Indeed, never too many. Stephen Carroll, thanks a lot for that business update.